Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. Prices since the high in early February at $429.95 had been making lower highs and lower lows, sowing and nurturing some initially low-level bearish doubts. All these actions allowed me 11 weeks ago to draw my first bearish Andrews pitchfork here of any sort for quite a while. And it was for the early February to early March move, since finessed into what is now on my daily chart, a shallower, dark blue bearish shift pitchfork for the same move. And this looked good for a while. However, prices breached, though did not stabilize, below the dark blue lower time, currently at 317.55 in early to mid-April, as well as turning higher and pushing up over the dark blue upper time, currently at 372.60 in late April to mid-May, though again failing to stabilize, and prompting me to keep the dark blue bearish shift pitchfork still on my daily chart. However, prices have since headed lower once again, though at a slower pace, pushing last week and also this week below the dark blue middle time, currently at 345.05, and down to test the important 50% Fibonacci line at 335.15 for the whole of November 24 to February 25 move. All these moves also allowed me to draw a larger, bright red early February to late April bearish Andrews pitchfork. Now on this one, the market is just moving down to test the middle time, currently at 334.40. Now that is just below the earlier mentioned 50% Fibonacci line at 335.15. It's quite an interesting coincidence there. Now the bright red middle time can be seen as a support, but it is a bearish support as it declines a little each day, as does the dark blue bearish shift pitchfork. To find positive uplifting supports apart from that 50% Fibonacci line, you would need to look a little lower at the gold rising long moving average, currently at 324.15. And this zone below, roughly between 320 to 325, is a crucial level. As if this is tested, then we could be looking at a pretty large bearish pattern here. We might have a possible whole of 2025, a very large double top pattern. Now, this hasn't happened yet, but it is worth considering. Thus, whilst they are not targets yet, we might have a primary, let's call it a primary potential down in the 263 even zone. And a secondary, harder to reach secondary potential, down in the 229 even zone. Finally, there's something else I'd like to look at here. And for this, I'm indebted to Ray Bradbury for asking me about New York coffee 15 weeks ago. And I went at the time to my longer term charts, the monthly charts, where we can see some possible insights. You see, on the monthly longer term charts, I noticed a pattern that had not been immediately obvious to me at the start of 2025 when I last reviewed the longer term charts. It is a multi-year 2012 to 2024 very large reverse head and shoulders bottom for a bright red neckline on my monthly chart, currently at 274.90. The break higher over this neckline has already reached its primary target, but it has, or should I say had, a secondary, much harder to reach target X up in the 433.35 area. What is interesting about this secondary target is that nearby is the next 100% projected Fibonacci line here, which is at 433 3/4, quite close in the scheme of things. So what does this mean? Does this mean the market will turn at these levels? Up to now, I was not able to say, though we did have a monthly shooting star pattern, usually seen as a bearish pattern in February, and an indecisive doji cross with a long tongue topside on top of it in March. But then April was a bullish engulfing pattern, something which is not that surprising given the previous month was an indecisive doji cross. Though May made a significant pattern. A bearish opening long black Mariposa that dropped down through and closed below the important 50% projected Fibonacci line at 347.20. Thus prices for the first time in May closed back down below the dark blue upper time, currently at 380.20, of the interesting 2019 to 2023 bullish Andrews pitchfork, the broken one. I am now siding towards the topped out camp in this, as I have said here for months that, and I quote, If there ever was an area where the market could hesitate on the top side, then this 433.35 to 433.75 area would be a reasonable choice. End of quote. Below we now have the rising 1 year moving average, currently at 318.35, the 2011 high at 309 even, and the dark blue middle time currently at 304.5. These will be reasonable supports, I would think, so just be careful of any reversion back up towards target X area overhead, though as I indicated earlier, it would seem prices may be trying down towards the bright red neckline now. London coffee. 22 weeks ago I drew a new large pattern that for a considerable time encompassed all the recent significant elements within it. It is not ideal, and it was also quite large. It is the bright red, shallow, large bull channel, currently 49.09 to 61.68. Now within this pattern set other patterns, most have been retired, but some have not. Additionally, I also added a dark blue early May 24 to late May 25 uptrend, currently at 48.01, that sat just outside and below this pattern. 2 weeks ago, all these were breached and then broken on the downside, pushing down through the 50% Fibonacci line of the May 24 to February 25 move at 45.55, and today piercing the June 24 high at 43.95. Now, going back a bit, we also had another pattern I spotted and asked to be considered. I noted 16 weeks ago actually. A late January to late February Adam and Eve double top pattern. The primary target was reached 14 weeks ago, and the secondary hard as reach target was achieved 9 weeks ago. Now back to the recent market, and looking below, I said 8 weeks ago, and I quote, apart from the bright red lower bull channel line, we really don't have that much until we reach the 50% Fibonacci on the May 24 to February 25 move at 45.52, which ties in with the early December lows at 45.40 and 45.07, but doesn't look that strong. However, we have a wide congestion band further down, starting at the April 24 high at 43.38 down to the lesser Fibonacci line at 40.95, end of quote. This wide congestion zone between 43.38 to 40.95 is now about to be tested. To add to the bearish pressure, I said 5 weeks ago, and I quote, they now have the overhang of the market from roughly 3,300 up to the year's high at 58.49, sitting above. And now that we're up here, I've been wondering whether, as I said 2 weeks ago, so that's now 7 weeks ago, and I quote, whatever rally we have, well, whether it will soon start to peter out. Don't get me wrong, we have a strong reactionary move back up from a good looking bright red bull channel. But we also have some nearby overhead resistances that may come into play on any attempt over 5,300, end of quote. Now I added 3 weeks ago, and I quote, those resistances came into play, and I'm now considering whether this was a cusp in the market or not, end of quote. Well, we now have not only had the overhang pressing lower on us, but also the impactful force of the break below the bright red shallow large bull channel. Thus, for such a break low, we would have a primary target X down in the 41.64 zone, and a secondary hard to reach target X1 down in the 35.15 zone. For tertiary, so much harder, much harder to reach target X2 down below my chart in the 28.60 zone. So what do we have in the way? Well, apart from the immediate June 24 high and the April 24 high at 43.38, we have a few lesser Fibonacci lines, but one is interesting. It was the 61.8% Fibonacci line, the May 24 to February 25 move at 42.49, which is just about coincident with the November last year low at 42.41. Beyond this is the bright green lower time, currently at 40.22. That is a little above the August 2024 low at 39.32. Beyond these, we have a pair of interesting 50% Fibonacci lines for November 21 to February 25 at 38.08, and the May 2021 to February 25 move at 36.49. Now, to be honest, if we manage to break the August 2024 low and the congestion that is just above it, then I am not sure how strong these 50% Fibonacci lines will be.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.